Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are up 1.2% and we have about 1 hour left in trading. On the 1 hour chart we do see a divergence on the 1 hour MACD as we were overbought on the 1 hour RSI, and on the 4 hour chart we do see we are still near overbought RSI, and we still have not converged on the 4 hour MACD. And at the moment, we do see a possible support on the 9 moving average. If that fails, we do still have the 18 moving average acting as support. So if we expand out to the daily chart, we are currently overbought on the RSI on the daily chart, and on the daily MACD, we are still strong as the width between the blue and yellow line MACDs are still far apart, and we do not see any divergence in the short term. So this uptrend is, or reversal I should say, is still intact, and at the moment we still have not quite reached the 200-day moving average. Ideally we want to play or get near it for several days, and we may see a rejection and revert back to the mean or the 9-day moving average, but at the moment we may have a couple chances of actually touching the 200-day moving average, which is at the price of $23.50. And if we were to mark for resistance, next possible resistance if we do break out outside of the 200-day moving average is the next resistance of $25, and as you can see there's a price concentration which acted as previous resistance back in early this year, March to mid-March, so beginning of March and mid-March. So we may see that in coming future, but at the moment, so if we do get a rejection immediately, I do see a possible support around the 200, or I should say 150-day moving average and the 9-day moving average, which is around the price of $21.90. And there's also a price concentration here as well, acting as support. So if we do move down lower, that price movement is roughly around 4.6%. However, if we do continue to move on higher, that price movement is roughly 9.8% move up. So let's head to the forecast model. On here, I'll go day by day where natural gas would head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the forecast model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. And this trend dates back to September 24th to December 18, 2013. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we were below the middle Bollinger Band, touching the bottom Bollinger Band. So let's just mark all the instances where it marked the bottom Bollinger Band. So we have 2. Next, after that, we touched the upper Bollinger Band right here. And then after that, we proceeded to head down lower, even have an instance where we reverted back to the mean real quickly, but failed. We continued to move down lower. So we have those instances, and then we proceeded to move on higher right here, right towards the end. So we have that here, and I forgot one more. We also reverted back to the mean right here, or we found support in the middle Bollinger Band right towards in between when we hit the upper Bollinger Band, and then we proceeded to move on high from the previous time. So we have that instance. So we start to see a similar pattern shaping. So let's just mark all instances where it touched the upper Bollinger Band. So we have that here, and then one right here, and as indicated right towards the end, if we move down a little bit farther out, we see that right there. So we have 3 instances where we made a good attempt on touching the upper Bollinger Bands. So let's mark where it touched the bottom Bollinger Bands. So we have one in the beginning, one right here, and then next we have one where we reverted back to the mean in 1 day, and next we have another support where we were at the middle Bollinger Band for several days. So we have those points. So what we have is 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. Again, the trend that we just examined was September 24th, 2013 to December 18, 2013. So back then, natural gas was up around 3% or 2.96 to be exact in next coming days. So if you want this forecast model, feel free to sign up in the link below and you'll get it when it's released. So that is it. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.